And thank you very much for joining us today. I'm Mel Monaco. I look after public affairs and marketing here at RIC, Regional Investment Corporation. In attendance today, we have quite a number of you from right across the and others that are all interested in learning about RIC loans and how we might be able to help your business manage through, recover, rebuild, and prepare for the future as well. Firstly, I'd like to acknowledge that we are meeting here in our RIC head office in Orange, central west of New South Wales on Wiradjuri country, and acknowledge that we have attendees from the various lands across Australia. I'll just do a brief acknowledgement of country, that RIC acknowledges the traditional owners and custodians of country throughout Australia. We pay our respects to the people, the cultures, and the elders past, present and emerging, and we acknowledge their continuing connection to the land, sea and our community. Just a little bit of housekeeping. We have our agenda there on the screen. So today our webinar is actually based on your most frequently asked questions. So questions we get from our customers who might call our contact centre, and questions that often might trip up some people when they're going through the application process. So we're really trying to make this a bit more of a guide and, you know, with some simple tips for you on understanding eligibility, how to apply, but then also what you need for your application. The webinar is very much designed to be instructional. So we want to share the how to go about this and try and be a bit specific as well about some of the things that could be, pitfalls or may hold up the application process, because we're really here to support farmers and to ensure that our funding goes to the right people. So our brief agenda here is we're going to do an overview of RIC loans, and one of our very experienced and passionate RIC agri-lending specialists is going to take us through eligibility criteria, how to apply, and set us on the pathway of what the loan process actually looks like. Very, very happy to have our partners, Rural Financial Counselling Service here today. They actually work very closely with us here at RIC and help farmers as well with applications, and also to understand what state government, federal government grants and loan programs might be available in the various states. We'll have a panel discussion, and this will be quite interesting to hear from you. And, you know, we have had a lot of questions as well at the registration time. So we thank you for submitting those questions. We hope to answer those along the way today. But as we're presenting and you're thinking things through from your business perspective or from your realm, please feel free to use the the Q&A function that's at the top of your screen. Add your questions in there and we'll try and answer those in this panel discussion. And we'll also have a feedback poll at the end of the session as well, which is very valuable for us, so that we can understand some of the challenges you may be facing, get your feedback, and we can continuously improve these sessions into the future. I just wanted to remind you that this webinar is being recorded, and we'll also email the session for you as well, and you can have that as a reference tool. And we also include this forum on our website as well for others that may not be able to join us today. Okay, so I might just go to the next slide, please, Danny, and I'll introduce our speakers. So today we have the following experts with us today to share their experiences and to answer your questions. So Peter Muirhead is our agri-lending specialist with RIC. He brings a wealth of experience in his role at RIC and also previously as a rural financial counsellor in southern and central New South Wales for 10 years. He's also worked in banking for 30 years and has a wealth of experience in finance generally. So we're really pleased to have Peter here today. He also understands the challenges that many farmers are facing because he has been in farming and run his own business over the last 40 years. So yeah, very, very happy to have Peter here. So welcome, Peter. Likewise, Daisy May is part of our RIC Agri-Lending Specialist team. Daisy has been with RIC for about 18 months, but has experience as an ag economist with the Department of Primary Industries in Central Queensland, and also working in grazing economics. Then she moved into agri-finance and working with one of the commercial lenders in Rockhampton before joining us. So welcome, Daisy. I'd also like to extend a warm welcome to two representatives from the Rural Financial Counselling Service from areas who are actually experiencing drought right now and drying conditions. And we're also seeing rising application numbers in South Australia and also Victoria. We also understand at this time parts of southern New South Wales around the riverina are also managing through drought conditions. So if you're from those areas, in particular, these loans may be beneficial for you. So we have Ashley Cool, who is a business financial counsellor with the Rural Financial Counselling Service in Victoria West. Ashley has been helping farm businesses in his role as a rural financial counsellor for 14 years. And on top of this, he has 28 years in banking as well. So welcome, Ashley. And Hayley May is a rural financial counsellor for business support in South Australia, Northern Territory, based in the Riverland, and has been part of the team there since 2019. Through her experiences, she has worked with various farm operations and industries, including dryland cropping, to livestock and also horticulture. So she's helped multiple businesses understand what options are available to them to help them through tough times. So thank you for being part of this session. We are very grateful for the work that you do to help strengthen Australian farm businesses every day. So about RIC. Many of you may know a little bit about RIC. You may have Googled us and had a look or heard us in media, or someone you know may have even spoken to you about RIC loans. So here's a brief overview from me. So RIC was set up about 7 years ago, and in that time we have delivered over 3,500 loans approved at a value of $3.72 billion. We've also have $295.7 million in new loan funding remaining for this financial year. We have recently had an announcement by the Prime Minister and also our Federal Ag Minister, Julian Collins, providing an additional $1 billion for new loans beyond FY 2026, which has been welcome news. Our loans' purpose really is to restructure debt, to reduce interest repayments and also improve cash flow, to pay bills and operating expenses, purchasing feed or for capital expenditure, manage future risk from drought or other events, or to help diversify operations. We also have an Agri-Starter loan product, and Peter will talk a little bit more about this shortly, which is to help new farm businesses or complete farm business succession planning. We will hear shortly too about eligibility criteria. We want to stress through this session, which is very much educational, about we do have eligibility criteria, so we are not for everyone. So it's important to understand what that key criteria is, which will help to manage expectations about who the loan is for and then how to apply as well. And this will ensure a very smooth process. One of those key criteria is commercial debt, which is a requirement of a RIC loan. And it is important to talk to your bank or your commercial lender early in the process if you are considering applying for a RIC loan and your intention to apply for a RIC loan. And this is very important to ensure a smooth process to settlement. Okay, so moving on then, we will move into our session about getting RIC ready. And this is where, Peter, I invite you to present. Thank you.
Thanks, Mel, and thanks everybody for joining. So in this session, I'll take you through the RIC process and discuss the different types of RIC loans, the main eligibility requirements, the application process and the support that's available for you, the key items you need to put with your RIC application to help us progress the application as quickly as we can, and what it means to be a RIC customer. So we can go to the next slide. Okay, so there's 4 types of RIC loans. The drought loan, that's to help you, it's up to $2 million. It's helped you to manage through the drought, recover from a drought, and maybe even prepare for the next drought. The funds, you can use the loan to refinance your debt. You can actually get increased working capital or to assist you. You might decide to construction hay sheds on the property or improve your water management processes and things like that. You can use that for that purpose. RIC loans have got to be used for a commercial purpose, so unfortunately you can't go on a holiday with them, but they're fairly flexible in what they can be used for on your farm. With the drought loan though, you do need to provide a drought management plan. The ag-biz drought loan, that's up to about $500,000. As you know, farmers are not the only people impacted by drought, so usually your contractors and your suppliers in that particular area are also impacted. So they can also get these loans of up to $500,000 at a concessional rate, and again use it to refinance debt, operating, working capital, things like that. Our main loan is the farm investment loan. When I say it's the main, it's the one that I generally see come across my desk. Again, it's up to the $2 million. It's where you've been impacted by an event that's outside of your control. That might be flood, drought, bushfire, market collapses, all those sorts of things. And it's a cumulative event. You've got to show a 2-year impact. Again, you can use it to refinance debt, working capital, even purchase a property next door, all those sorts of things we will consider. The ASK loan is the Agri Starter loan, again, up to $2 million. There's two parts to this loan. There's a first farmer, that's where somebody's looking to buy their first farm. While it's your first farm, we have a requirement that, this is not, you're just not getting into farming here. You've had some experience with it. Usually we're looking for 3, 4, 5 years sort of experience. And then you've decided, well, okay, now I'm in a position to look to buy my first farm. The other part to it is part of succession. There again, I recently did a deal where they were looking to buy the property next door. The two sons decided they'd buy that. So we assisted them help buy that property as part of their succession plan. And there again, they had a formal plan that we could go through. It wasn't War and Peace, but everybody was a part of it, and it showed the steps how succession would work for them over a period of time. All of these loans are 10-year loans with an initial 5-year interest-only period. I'd strongly recommend you look at the RIC website. It's really good with the individual loans, giving you the full guidelines for each one of those loans. And there's even webinars on the different loans as well, which you can go through and provide you some detail. So is the RIC loan right for you? As Mel said at the start of the thing, RIC loans aren't for all farmers. There's 5 probably key eligibility criteria that we need to work through to make that sure that you're eligible for. So the first one is financial need. So we need to see that there's been a financial impact on your business that was outside your control. I'm working on a file, for example, at the moment where in 24 and 23, they had a cropping income of about 700-800 grand. And in 25, they've actually done their 25 accounts. The income's down to 200 grand. And from the discussions I've had with them, it's quite clear that this 26 financial year will also be significantly lower. So we need to see 2 years impacts, but one of those can be the current year that you're looking at now. Financial, that doesn't necessarily mean you're eligible, because you have to have a need for that. And what we mean by that is, while you may have been impacted by a drought or a flood, your operation may still be able to be generating a profit from that. It may have a history of profits. You might have really strong equity position, and you might even have a fair bit of money in an FMD and things like that. So do you really need a RIC loan to continue on? Possibly not. So we need to see an impact, but we also need to see a financial need. The next thing we do is as a commercial debt. So while RIC can lend up to $2 million, there is a requirement that half your debt has to be with a commercial lender. Now, what that means is, generally speaking, we look at commercial loans as being like a term loan or business markets loans. We don't generally view overdrafts or stock loans or leases as commercial debt. But that's not always the case. To give you an example, I was recently looking at an application for a client over in South Australia who had an overdraft of 450,000. It was pretty well up to the top of its limit. After some discussions with them and getting their bank statements, it was quite obvious that over half of that debt had been sitting there for at least a couple of years. So we can view that debt that's sitting there for a long period of time as commercial debt. And what we actually did with that particular client is we refinanced that half of that overdraft that was sitting at a higher rate to give them the maximum advantage out of it. Quite often, once you start talking to RIC about your commercial debt, we'll have a look at what you've applied for. We'll work with you about what eligibility and stuff is and try to see if we can maximise that amount of money that we can potentially lend for you through that process. But the criteria is that 50% of your debt has to be with a commercial lender. Now, a commercial lender is generally one of the major banks, but it doesn't necessarily have to be. There are plenty of other smaller tier banks that do it. And we even come across loans that are provided like vendor finance type loans as well. So those types of loans, as long as there's a written agreement there, preferably there's a mortgage document there, so it's all written down and it's real, then we can potentially view that as being commercial debt as well. And it's also got to be at close to bank interest rates. So if it's, mum and dad, banker mum and dad, and they've decided to do this deal at 2%, that's probably not going to be viewed as commercial debt. The next criteria is sufficient security. So we're like any other bank. Formal security has to be provided to cover the loan. Generally, that is a land, mortgage over your land. It can include the water. It doesn't necessarily need to be the farm. Sometimes, we can lend against a property that's in town, if that works. And sometimes we also lend against stock mortgage, but I will admit that that's quite rare. We do, to help keep costs down, we do use our own internal valuer. And like, as I said, I've been working for RIC for almost 18 months now, and all the applications that I've been able to approve have all been we've been able to keep those costs down by using a RIC internal valuer. So sometimes, you might have had the property valued a couple of years ago. We can probably use that. We try to work with you to try to keep costs down as much as possible, but there's that requirement for us to have a mortgage over a land. That's one of the important things that, as part of this RIC process, is you talk to your bank before you apply for the RIC loan. That helps, you've had that discussion with them about, well, what potential security is available and what position the RIC might be able to take. We might take a second mortgage behind them. We might be able to isolate a property off to the side. They're all things that we can talk to you and your existing financier about to try to negotiate a suitable security position. You must have financial viability. So like any other bank, you've got to show an ability to service the debt going forward on a principal and interest basis. Clearly at the moment, you might be in drought or you might be infected by flooding or whatever. You may not be able to show that in the next 12 months. But as part of the RIC process, we ask you to provide some budgets that are a year on and year out basis. And, so what does a normal season look like for you, and what sort of income can that generate, and can that service the debt? And that's what we look at. We don't just look at the next 12 months, we look at that year in, year out. And there again, when you're preparing those sort of budgets, maybe some historical performances, your results in 23 and 24 are more like a normal year. Well, you could possibly use those to support the basis for your budgets going forward. And the last main one is you've got to earn 50% of your income from the farm, and you've got at least one partner has to contribute at least 75% of his labour on the farm. Now that varies slightly for agri starter loans, it's only 50%. So you can have, quite often I see with applications, you've got a fair bit of gear for, tractors and headers and things like this, and you're doing a little bit of off-farm income. But as long as the majority of your income is coming from your farm, then that's the criteria we work off. And as long as the majority of your farm, so your wife might, or one of the partners might work off farm for doing a bit of work off farm, that's fine, as long as one of the partners is basically 75% of his labour time. So they're the main criteria that we look through in eligibility. There are other eligibility criteria, but they're the main ones that we work through with you to make sure you hit our criteria. And as I said, unfortunately, not all the loans are for everything. So this is the pathway that we go through with a RIC loan application. You obviously submit it, you work through the loan decision process with us, and then we finalise the loan. So the RIC Ready application, I'd strongly recommend you view the RIC's website. It is really quite a simple. It's a great website. The tools are there to help you understand our requirements. The guidelines are there. There's a number of these webinars on the site there that just help you understand the RIC's requirements, and so that the likelihood you're going to meet the criteria is strengthened. And obviously we're not, you're not wasting your time putting your application into us. The next slide. So there's a number of key, so when you go on the line and you lodge your application, there's requirements to outline, what impacts have been. You don't have to write War and Peace, but if you can link back, like for example, the case in South Australia where you're in drought at the moment, the crops are clearly dried. Well, you've got your financials there. 24 shows 700, the 25 shows 200. There's a clear indication there of what's going on. So you can use that to put it in there to show that, look, this is the impact that's happened to me. But the main items you've got to attach with your application are your year in, year out cash flow. So what does a normal year look like over a 12-month period? And there again, what we really would like you to put with that is your assumptions about, your crop, like what's your hectares you've sown, what crop you're sowing, what sort of yields you expect. And they're trying to tie that back to what you've been able to achieve in the past, really helps support that and give it some meat so that we can understand, okay, this is doable. The same, if you're running sheep, well, okay, what's your lambing percentages? What are you retaining a certain number of stock in your thing to keep, replace, your use? So what's being sold every year and what sort of prices? I was just looking at an application, in 24 and 23, they sold lambs for well over $200 each. Great result, but because of the drought, they only sold for $130 last year. So you can obviously put in an assumption, well, we think we'll go back to 24 and 23 and they'll sell for, $200 a head. Just try to give us some of that supporting thing. We need 3 years worth of financials. I will admit most of the applications I've seen lately, we are getting 25s. It does help us get a better feel about your business by having the most current up-to-date figures as possible. But at the moment, we need at minimum 24s, 23s and 22s. So if you can provide management accounts or get those 25s incorporated into the application, it does help us. It also helps, why we only need 3 years, if you've got, financial statements for 23 or 22 and 21 that showed, yes, the business was operating better and that's a more normal year, you can include them with the application to give it some weight and say, well, look, there it is. Generally speaking, as an agri lending specialist, I'll talk to you about that and ask you to provide me that evidence so that I can see, okay, so this is what a normal year looks like for you. The other things we need is a statement of position. quite often now with farming operations, you might have a partnership, you might have companies, you might have trusts involved. The statement of position is a complete snapshot of the whole lot together. You don't have to give us, you know, 3 separate snapshots, just a statement of position. If you're controlling the whole lot, then just give us that position. We ask you to put in your stock details. We ask you to put in your equipment. Well, with the equipment, you can probably just list the major 4 or 5 items and then just summarise. You just amalgamate the rest in there. And as I mentioned before, it is really important that you talk to your existing financier that you're looking to apply for a RIC loan and, you know, tell them that it's happening. The reason for that is too, because as part of our process, we do contact them and, you know, talk to them, get them to provide us an update of your facilities and things like this. But it's also really handy for, you know, when I speak to you and then I go ring up and talk to your banker, you know, sometimes, especially around the security items, we can then try to negotiate a bit. So what works for you, the customer, but works for the bank and works for RIC, and negotiate that sometimes. You know, sometimes we can, I had a case where the client had, I think about 11 different properties, and we were able to isolate 2 and say, well, okay, RIC can take those 2 as secure its position, and the rest remains with your existing financier. The benefit out of that is if you need to go back to your banker in a short period of time, or, you know, over the next, because we're there for potentially there for 10 years. If you need to go back to your financier for more money, you don't have to deal with us. We're just sitting on the side. That doesn't work for all operations, but, you know, if we can negotiate that for yourselves and make it a better outcome for you, that's what we try to do. Okay, next one. So once you lodge your application, generally what will happen next is that you'll get a phone call from an agri-lending specialist such as myself, and usually that'll happen within a week or 2 of you lodging the application. So it's pretty quick. If you've got that financial data there, those cash flows there, the statement of position, we can have a look at all of that before we ring you up and introduce ourselves and have a chat about your business, so that we've got a bit of more of an idea than trying to start from scratch. So it is important that all that data is there so we can move the application on as quickly as we can. We do try to have decisions made within 50 days, and at the moment that's what we are doing. So putting as much information there, having that information, having that previous contact with your financier, all helps in us trying to get a response back to you as soon as we can. So being a RIC customer. So RIC are there, we provide a 10-year loan, of which the first 5 years is interest only. But we're not there. I mean, 10 years is a long time, but it's not really in the life of a farm. So we're there for a relatively short period of time to provide you a financial benefit through a lower interest rate, and then help you improve your cash flow with the idea that you go back within that 10-year period. You know, you might decide, well, after the interest only period, you'll flip back to another bank. You don't have to stay with us for the full 10 years, but that's the option available. After the first 5 years, there is a requirement to pay some principal off the loan, and that's based on a 15-year term, as if the loan was to be repaid over a 15-year term. So it's a reduced repayments for the next 5 years with a significant balloon at the end. And, you know, that's there because if you're able to obviously make those repayments and keep that going, the likelihood of your ability to refinance at the end of year 10, I would suggest would be quite strong. You can make changes regarding your RIC loan during the period. That's not a problem. You obviously need to contact us. You know, you might have sold a piece of dirt off. I would strongly suggest if things like that happen, contact us early. Give us some time to consider that variation to your loan agreement, so that we can get it through properly, especially if it's involving a settlement. Payments can be monthly, quarterly, annually. It's really up to you. And as part of our discussions with you as a client, we'll set those repayments up for you. Thanks.
Thank you, Peter. Very, very valuable information there and lots of really good examples from your experiences that hopefully people will be able to take away. A lot of information to digest. If anything in what Peter has been speaking about has raised some questions in your mind, please put them into the chat or the Q&A function there, and we'll hope to get to those very soon. Now we'll move on to Rural Financial Counselling Service, and we'll talk about this as a very important network that's actually national. So just popping up where the locations are, and there's probably a location near you, but generally every state has a rural financial counselling service available to them. So the Rural Financial Counselling Service is an Australian government program, and it provides free, confidential and independent financial counselling to those farmers and small businesses at risk of financial hardship. Their goal is to build financial capability across the agricultural sector, encouraging farm businesses to be financially self-reliant and better prepared for risks. They are professionals, as you will see very soon. We'll hear from Ashley and Hayley. They will listen to you and provide financial options to support your needs. One of those could be a RIC loan, but there may be other options available for you as well. So first up, I'd like to invite Hayley May from the Rural Business Support Group in South Australia to share more about the important role that the Rural Financial Counselling Service is doing and making a difference in farmers' lives. So welcome, Hayley.
Thank you. So like Mel said, my name is Hayley. I am based out of the Riverland in South Australia and work through Rural Business Support as a business financial counsellor. I've been doing this role since 2019 and have seen a variety of different farm businesses look at RIC loans. I guess like Mel said, the financial counselling service is Australia-wide. We provide a free, confidential and independent service to any primary producer that's eligible for our services. And we mainly see a lot of people in some sort of financial hardship or some sort of financial impact to their business. Next slide, please. At the moment, there's many farmers out there at the moment throughout South Australia, but also throughout Australia that are doing it tough through lack of rain, through dryland cropping, through livestock prices, destocking due to feed restrictions, wine grape growers through price reductions, and lots of all those general costs of production throughout many farming businesses that are experiencing increase in their expenses. So the role of the financial counsellor that I play, it's to navigate your financial pressures, understand and assess your eligibility to grants and support payments. Obviously, each state has a little bit of a different criteria, different grants available. So each one has some different capabilities. I guess the main role of financial counselling that I see is having those early discussions, early chats about your business and those financial pressures that you're currently seeing. RIC does come up quite a lot in discussions with clients that we see. And there's lots of different ways that RIC may be able to help, but it's just about understanding what is your need and what are your circumstances. Next slide. So what can a financial counsellor help you with? So firstly is understanding and identifying your financial position, finding out where your business is at, looking at your statement of position, considering your short-term and your long-term implications to market changes or environmental impacts, whether it's lack of rain, whether it's storm, those sorts of activities, market crashes, identifying your options for your business and what you might be able to navigate, develop plans and manage your cash flow, help with creditor payments. A lot of it comes down to cash flow budgets and understanding where your income is or isn't coming in, accessing dispute resolution services, and also navigating, like I said before, any grants or any support payments. RIC comes into those discussions as well. So I guess today's main focus at the moment is on RIC loans and how that might be able to help and get your business through a potentially tricky time at this stage. I guess there's lots of different ways a RIC may be able to help you, and the processes that are involved in a RIC application. But I guess the main thing that we want people to understand is having those early discussions, thinking about how a RIC loan may be able to benefit your business, whether it's to reduce your interest rates, to get some interest down on expenses, or to provide you that extra working capital. That's where we can sit you through, talk through your business, talk through your plans going forward and how you may be able to get you through these tricky times. But what I'll do is I'll hand over to Ashley, who is another financial counsellor based in the Victoria area, and he will step you through what makes a good application, and also potentially some of the documents that we need as part of the application process. So I'll hand it to Ashley.
Thanks very much, Hayley. Hello, everyone. And I love that summation of rural financial counselling that you've done, Hayley. I'm from the Victoria West service, which is one of 3 services in Victoria. I'm based out of Mildura in the Sunraysia area, and we service the Mallee from this area. But in Victoria, in Western Victoria this year, down south it's been very dry, and then there's been green drought and the implications of that, and our region dry, and also as part of the food bowl, horticulture has got some real issues as well. So I just wanted to touch on 7 quick points about what makes a good RIC application. Some I'll gloss over because they've already been covered pretty well already. So just right from the top, be clear about what events or sequence of events caused your financial difficulty. If you're sequential, number one, it's going to be very easy to read for the RIC assessors, and B, things won't get missed in the list. So logical, easy to follow, that's the best chance of a successful application. It's already been mentioned about discussing with your bank. I like to think it needs to be a complementary relationship, bank and RIC, going through, and particularly if the security is shared, a particular property, and where there's a first mortgage and second mortgage, and then say RIC is running second. If the client needs some additional carry-on finance, and that usually comes in a hurry, that has to be worked around with the deed of priority and how that gets added on to the bank, who's ranking third, and then as well as first. So that can take time. The need is pretty prompt usually. So I guess getting your working capital right as you go into the process is a really good thing. Provide a clear business structure diagram. I think that's good for RIC, but it's also good for someone preparing the application, so that you know where that's the process of it, how it's going through. Don't try to collate and submit the application in one sitting. I think sometimes you look at some of the things we've got to cover off, like financial need, financial impact, drought preparation, drought management, drought recovery. You scratch your head a bit sometimes about how to best fill that out. But I find, I don't know if it's just me, but making a start and then some more things, and the client you're working with, more things flow over a little period of time. And, oh, yes, we thought of this, and that's a valid thing to add to it and add some credence to the application. The security offered and the cash flow presentable must be bankable with a conservative loan valuation ratio. That RIC internal valuer, it doesn't help anyone if they come in and do their work and we're miles out with what we've done as an estimate going with that. And also in the cash flow budgeting component, it's maths, but there's human nature, and some of us, you know, I'm not sure how everyone feels about themselves, but some of us are very conservative. If we're doing a budget, we don't want to, you know, overstate things, so we're conservative. If we're too conservative, we're not really helping ourselves very much and helping to sell the application. Others of us might be very positive and we say, well, I think we can achieve this, we can do that. Is that helping things if that's something that isn't really achievable? And going through then the expenses of a cash flow budget, you know, you're comparing it to past financial statements, and if you're saying, oh no, that's high, that'll be a lot less this year, and we say that for a half a dozen or more items, that's going to be way less, that's going to be way less. Is that a realistic thing? You know what I'm saying? Seek out local climate and weather anomalies if that will help the application. Like where I am is a 10-inch rainfall, and if someone misses out on the thunderstorms that provide 3 inches of that, and that there's 3 inches in thunderstorms and the neighbour gets it, but your farm misses out, that's a significant factor, I believe. So we localise things. And finally, be clear, confident and realistic with your assumptions. Confident is the word I want to pick up on that. If you're tentative about your budget, revisit it until you're not tentative. RIC will pick up on a whole lot of things to address if need be, but if you do it very well, first up, that's a really good thing. Spelling out how assumptions were made, and you know, do as many budgets as you need. I think, like there's this current year, there's the year in year out, but you know, there's changes. There's the result of the investment that you might be applying for, and for an example, in horticulture, if the market dictates you need to change the variety of what you're growing, it might be 5 years budgets before your vineyard is totally changed over to the new system and is kicking goals in that way. So that's all I've got just for now. Thank you.
Lovely. Thank you, Ashley and Hayley, for your insights and also for your tips. You guys are obviously doing very valuable work and a key conduit for us, for RIC Loans, in helping to with those applications. So I invite you to keep your cameras on, and also invite Daisy in, and also Peter, where we're going to have our panel discussion and explore some of these issues a little bit further. So if you are on desktop, you can use the Q&A icon at the top of the screen to add some questions. We have had a number of questions submitted with registration, so we can cover those now, or hopefully we may have covered most of them through the presentation. I might just start, and I might throw this one to you, Daisy, and bring you in first up. So we understand that, you know, farm businesses can be quite complex. There isn't, you know, an individual one-size-fits-all for farm businesses. And we ask for relevant contacts on our application form. Can you just give us an idea of what you mean by this and why it's important to have all the contacts related to the farm business?
Yep, thanks, Mel. Hi, everyone. Yeah, that is really an important thing that we come across in our applications quite a lot, where, of course, there's your first contact that puts together the application, and often is expected, you know, whoever puts themselves there, they're often dealing with the backwards and forwards and getting it all through. But aside from that, we do need to often have, you know, most of the people that are involved in the running and the ownership of your business. So, you know, if you're a partnership, there'll be more than one partner, so we need to have all those partners included in there. The same with companies, you know, the directors or the shareholders. With the trusts, again, have your trustees. It's just basically like if you're, you know, being a new to bank application, like pretend we're the bank, and they need to understand everyone that's involved in that operation.
Yeah.
Thanks, Mel.
Okay. Yeah, no, that's good. And I suppose a sub question to that one, we had a Queensland farmer ask about that. Can a small company registered as a PTY Ltd secure a loan, or do loan applicants need to be individuals?
No, so the applicant for our loan is often, the main trading entity. Doesn't have to be. It could be your security holder, depending on, how you've set yourselves up. But no, it's they need to have an ABN. So if it's an individual, it would need to be, sole trader. We do, we often, we obviously need individuals as our contacts to deal with, and they might be providing a guarantee somewhere as well. But yes, of course, trusts, companies, partnerships, they can all be applicants for the RIC loan.
Okay, great. Peter, this one probably relates a little bit to the AgriStarter loan, which you spoke about earlier. Can I apply for a loan if I lease country for my primary producing activities? So the land is actually not owned by the farmer. It's more of an adjustment type arrangement. Just get you off mute when you get a sec.
Sorry about that. So there's a couple of things with that. Quite often I see applications where people are leasing country, so that's not an issue. But the requirements are that we have to have formal security. So how is that going to work? Is probably one of my questions. And then what's the money to be used for? So you've already got commercial debt. So leasing land in itself doesn't knock you out of applying for a RIC loan. And in fact, I've done a number of applications where, one I'm actually looking at the moment, where they're actually leasing land from mum and dad. They're looking to buy an adjoining property. They're getting 50% of that property debt with another bank. We're going to provide 50%, and they will continue to lease the additional land to show that they can service that debt. So leasing certainly doesn't knock you out of doing it, but you've still got to provide the security, and have that commercial debt sitting there at the same time.
Yeah, excellent. Now, Hayley, this might be one for you, I think. We've had one farmer ask that they'd love more information on how to demonstrate ongoing viability of operations. And I suppose it relates back to those 3 key documents that we need for our assessors when they're looking at making a decision on a loan, which was the statement of position, the 3 financials, and also the cash flow budget. So have you got any tips or information around demonstrating viability?
I guess those key documents, like you just said, are the key ones that we'll be needing for a RIC application assessment. So obviously your statement of position, finding out what your equity level currently is on that statement of position, going through your viability with your cash flow budget. Does it meet repayability, hopefully in that year in, year out cash flow budget? I guess the main role of what I do is as a financial counsellor when looking at a RIC application with anyone is looking at those key things first. I generally don't go into an appointment going, let's do a RIC application. I go into an appointment going, okay, let's look at your business. Let's look at your availability to options. RIC might be one of them. But those 3 key main ones that you just spoke about are the ones that I look at as a base summary of any client that comes through the door. We need that for anything, just to assess where they currently are, and then from there, find out where their viability is or isn't. Even if I think there's a question mark on their viability, I test the waters and go, if you still want to do a RIC application, there's no harm in doing it. We can test the waters and see where it fits. Don't rule yourself out. Don't self-assess. Don't think, no, I can't do it. It's too hard. I can't meet viability. I don't think I'm viable. I don't have enough security. Don't overthink those things. Let us help you navigate that. You can test the waters with an application. It doesn't cost you anything to put an application in other than a bit of time. So those 3 key ones on that viability, we can step through that. Any state has the financial counsellors available to you. So reach out to them, ask them, can you help me go through these things?
Yeah, yeah, that's a very good answer. And I think one of your key messages I took out there is don't self-assess. You know, if you need help or you have a question, there are people that you can reach out to, such as through your service or even calling RIC directly to talk to one of our agri-lending specialists. I might bring you, Ashley, in. You're obviously based in southwest Victoria, and there's a lot of drought and dry conditions in your area. We have actually been seeing high demand from Victoria for a number of months now. So what has been your experience? And I suppose for people who might be on the call today, like when is the right time to reach out to you or to reach out to RIC to explore whether they should be applying for a RIC loan?
Yeah, thank you, Mel. Yeah, the message from rural financial counselling is always early engagement. You know, it doesn't hurt to catch up with us. A lot of people are quite unaware of what we can provide and what we can assist with, and the toolkit, which includes RIC. So early engagement, you know, it might involve in some other areas as well, going a different path from an initial appointment that Hayley says. You know, we don't just go in and say, this is what we're going to do. We have a listen to see what's going on. So, yeah, just in regard to, yeah, that's as soon as possible. And yeah, that's really the answer.
Okay, yeah, great. We've just had a question from Fiona about interest rates for RIC loans and also bank fees. So I presume that the commercial banks would set fees for, you know, individually, and that would probably be something you would need to talk to your commercial lender about. But from a RIC point of view, our RIC rate at the moment is 5.18%. I might get you, Peter, just to talk about a little bit about when RIC interest rates are reviewed and how that works.
Yeah, so the interest rates are reviewed twice a year in July and January. Presently, it's 5.18%, so it'll be reviewed again in January. It's usually set on the 10-year bond rate, but I understand that that's being reviewed at the moment by the government. So, yeah, we'll wait and see. But I'm still seeing with most of my applications, there's probably at least 1.3 to 1.5% variance between what the client's paying with their commercial banker and what the RIC interest rate is currently offering. So to me, there's still quite a significant cash flow advantage by doing a RIC loan. Yes, the rate, that margin has got, it was over 2 and now it's not, and we'd like it to be more, but that's what the rate is at the moment. But there's still a benefit out of it doing a RIC loan. And as Hayley said, don't just dismiss, talk to your RFC, we've got a 1-800 number there, ring us up and we can have a chat if you're unsure whether you'd be able to apply or not. And then hopefully, put your application in and see how we go.
Yes. And, we have been 5.18% for over 12 months now, and they have been frozen a couple of times with those last decisions. But that is very much a Australian government decision. But as Peter said, there are a number of features with the RIC loans that we have discussed in regards to low fees, no early repayment fee, that the 5-year interest-only payments as well, which is something that a lot of commercial banks don't offer, and that does give a lot of breathing space, especially when you are managing through or trying to recover or rebuild after some of these major challenges that we're seeing at the moment. Another question here from Tim. How far back do you look at for cumulative financial impact of an event? And this is looking at our farm investment loan in particular, where multiple events or impacts may be affecting your business. So in other words, is there a statute of limitations to claim on impact? Is that part of eligibility? Is that one for you, Peter?
Look, I have looked at impacts going back to like 2020. And when, obviously a significant part of Australia was in drought back then. So it's also looking at that like how long did that impact last? Usually with it, well, even if you look, as I just said about South Australia, it's not a 1-year impact. So you might see that impact in their stock, their stock numbers might have taken 2 or 3 years to recover. So we try to work with the applicant to try to work out, okay, where those impacts are and seeing whether we can make it work and fit within the criteria if we can. If it's, older than that, I'd suggest that's probably making it fairly difficult. But I have looked at ones in the last 6 months where there was an impact back then, and then there's been a more recent impact. There's been another impact more recently. Yep.
Mm-hmm. Okay, Daisy, this one might be a good one for you. We do have a lot of inquiries and interest in our Agri-Starter program, which is for first farmers and succession planning. So one here from Jackie, looking at getting a Agri-Starter loan. Do I need to get a loan from a bank first and then apply for a RIC loan? What is sort of that order, I suppose, and do you need them at the same time? And do you need a strong reason for the purchasing of a first farm or the land?
Thanks, Jackie. So for the Agri-Starter, basically the answer is no, you don't necessarily have to have it now when you apply, but we do like to see that you've started a process with a bank, because when it comes to drawing down a RIC loan, then there needs to be that commercial debt there at that point. So I have worked on Agri-Starter applications where they might have had something in the works or a pre-approval, and then as the bank might have given a pre-approval subject to the RIC loan. So then I'll work on that application on the RIC end, and then pass back to the bank, and they do their formal, and then we move the whole thing forward, and they get drawn down often on the same settlement day. So it's nice when you've already got that debt there. It can make things a bit quicker. But yeah, no, you don't have to have it. But if you were to apply and you hadn't even started a process with a bank, then it's likely that, we probably wouldn't want to start looking at that yet. We'd probably want to see some movement, because if it does take too long, the application would potentially have to sort of lapse anyway and close on our end until it gets further along down the track. What was that last bit?
Just the reason, just strong reason.
Strong.
I suppose it links back to experience of the first farmer.
Well, the reason enough is that you're trying to get out on your first farm. So within the application there for the Agri-Starter, you've got to present as a first farmer. You've got to give evidence of your experience and why you want to do what you're going to do, and obviously your year in year out budget is quite important in this instance where you haven't got historical performance to look back on. So we'll be heavily looking at that and working with you as to how the place you're proposing to get, whether that's a property and lease land or just the property, how that's going to support the lending that you're proposing to have, and that's if that all works out and rings true, then and there's a pathway to get there. Often there's a little bit of off-farm income too as you're working through that pathway, sort of from where we are now to where you're actually full-time on that farm. That's reason enough. There's no other. Yeah,
fantastic. We are just sort of on the hour now, so we might need to wrap up our panel discussion. If you have questions we haven't answered, please jump on our website. It has been designed for you with lots of toolkits, document checklists. So there has been a question about what documents are needed. All of that's in the checklist. Or give us a call and we can run through that with you. Our contact centre would be more than happy to help you. I'll just wrap up there. So thank you very much, Ashley and Hayley, for joining us today, and also Daisy and Peter. Peter, do you want to run through our quick takeaway tips for everyone, and then we'll basically get out this replay to everyone very soon as well, so you can watch it when you need to. So over to you, Peter.
All right. So hopefully today I've gone through some of the key eligibility requirements, but as I said, they're all listed there on the RIC website. For each different loan types of loans, so please have a look at those. But, unfortunately, RIC loans aren't for everybody. As Hayley said, don't self-assess. Please talk to us, talk to your rural financial counsellor, so that we can make sure that, if you are eligible, we can get you across the line with that. As I've said a number of occasions, if, we can only do half your debt, so please ensure that you talk to your financier, but also talk to your trusted advisors, whether that's an RFC, your accountant, your financial planner. Quite often, we do get applications in through the accountants, but obviously we'll talk to you as being the farmer. Include the right documents, as I said, at least 3 years financials, getting that cash flow right with some assumptions about the income and potentially if there's any significant variances in your expenses and your statement of position. And the other item, probably, which I didn't mention before, was probably your council rates notice. If that's the property we're looking at taking security, that can also be helpful for us to get the process going quicker. We do require security just like any other bank, and you need to be able to service the loan over a period of time. But, the RIC 1800 numbers there, we're all available to have a chat. If the person that you contact initially can't answer your question, quite often they'll put you through to an agri-lender specialist, just like myself. But, as an initial thing, go to our website, have a look at that, or give us a call.
Sorry. Thanks everyone for joining us. We won't hold you for any longer, but if you need to ask any further questions, please reach out to us. Thank you very much for your time.